What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see the stock market hitting a brand new all-time high but eventually selling off and closing lower for the day. Is the stock market ready for another pullback? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see SPY closing 0.28% lower and closing just below that 5 EMA, and we do want to note that we still have the bull trend. Now intraday we were trading up at a brand new all-time high at 473 and gave back all of those gains and closed near the low of the day, so we definitely saw some end of day selling. We did see a little bit of increase in volume on the selling, so it's definitely something we want to pay close attention to. And as I always tell you, watch that critical support at the 20 simple moving average, which is going to be right around 465. If we start closing below 465 after we have this very clear 5-wave advance, we will want to be a lot more cautious, because if we start getting below our 20 simple moving average, it increases the probability we're coming down to the 50 EMA, which is going to be sitting here at 455. That's just above our previous all-time high, and that would be a completely normal area to come back and test if we are indeed going to see another stock market pullback. So there's still the possibility we're going to get that Santa Claus rally, but don't rule out the possibility that we're coming back down to the 50 EMA before we go to those new all-time highs. Now we still have the bull trend and we're still above critical support, so while I'm telling you that we could go down to the 50 EMA, don't look too far ahead. Our lower Bollinger Band is still above that level and we're still above our critical support at 465, so watch that level at 465 and the support at 462, and if we start breaking and closing below those levels, then you want to be looking down here in the 450s. Now if we start reversing the sell-off as soon as tomorrow and start heading back higher, look for that breakout back above 471, because it does mean we're very likely going to that next price target at 477, and yes, it could happen in a flash. So this was either a bear trap where we're trying to lure in some bears before that next leg higher, or we're about to see this bull market rolling over and going through another pullback. If we get that pullback, watch those critical supports, otherwise remain bullish because we're still above critical support and we still have a bull trend. And while we could see that reversing, we haven't seen that reverse just yet. And in order to stay objective, we have to follow the price action and trend. And right now, the price action and the trend are still bullish. On the NASDAQ 100 QQQs, we were down 1.16% today, so we're definitely seeing more selling in the tech sector, which is exactly what I told you to expect with last night's video. Remember that the tech sector is very pumped up right now, so it would be completely normal to see a pullback, and that's exactly what we're seeing. We were outside above that resistance trend line all morning long, trading around 408.5, so very close to our price target at 409. We did close below that resistance level and very decisively with a very bearish looking candle back below the 5 EMA. But again, we can't say this 5-wave advance is over just yet because we still have the bull trend and we still have bullish price action. Today's price action was not bullish, but we are still above the critical support at 393. So on the QQQs, watch that 20 simple moving average at 393, and if we break below that, we still have strong support at 388 and our 50 EMA at 383. 383 is our previous all-time high, so we do have some confluence of support there. So overall, you can see this very clearly as a 5-wave advance, which means eventually we will see the market roll over and we will get that pullback before we can go any higher. We can't say that we're done going higher just yet because we still have the bull trend and we're still above 393. Now keep in mind, we did not actually hit that price target at 409, so we could still be due for another leg higher before we see this full-blown pullback. But overall, the trend is still bullish and the price action is still above critical support, so you need to remain objective and you need to continue to watch this price action. On the Dow Jones, we closed green for the day, going up 0.08% and closing above that 50 EMA yet again. However, it does look like at this point we should just go down there and touch that 50 EMA and prove it is a support level, so look for support on the Dow Jones at 355. If we break below that level, we're very likely coming back down to 351 or closing the gaps at 349 and 344. If we can stay above 355, we need to break back above our 20 simple moving average and regain that level as support. So we will need to see the Dow Jones breaking and closing back above 360. We're losing the bull trend on the daily chart, but we're still above the 50 EMA. So we need to see the bulls holding above 355 or we're very likely going down for that next leg lower and we could start closing these gaps below. Overall, if you're looking at the Dow Jones, this still looks like a very clean ABC correction. So after a correction, we could see a resumption of the bull trend. So don't get overly bearish unless we start closing below 355. On the Russell 2000, we were down 0.43% today, and we still see the Russell 2000 cooling down. We're going through a very clear ABC correction, and it does look like we could come back down to the 50 EMA. So as long as the Russell 2000 is staying above 230 or 232, it's still possible we're going to bounce and continue the bull trend. However, if we start breaking down below about 230 or 229, we will have to be cautious of that gap close below, which is just below 223, and that should be another very strong support level. That'll be right above our support trend line, and it will close the gap. So if we break down below about 229 to 230, look for that gap close and that support level right around 223. Now, if the Russell 2000 is going to break out and go back into a bull trend, we will need to see a decisive breakout back above about 236 and 238. That'll get us back above the 20 simple moving average and allow us to regain the bull trend, and we will have the price targets above at 245 and 250. If you want to wait for the decisive breakouts in the Russell 2000, you can go long above 236 or go short below 229. But otherwise, in between, we're very close to some strong support levels, which does favor the bulls to get a strong bounce off support. On the ARKK ETF, we had a very bearish day, going down 4.19% today, and we see ARKK closing way outside the lower Bollinger Band and very close to invalidating our inverse head and shoulders. Remember, to validate the inverse head and shoulders, we need to see this right shoulder staying above 107, which means we're very close to invalidating this as a bullish pattern and breaking down and seeing ARKK going into a full-blown bear market. So watch those critical support levels on ARKK at 107 and 106, because if we break down below those levels, we will very likely see ARKK continuing into a bear market, and it will be a shorting opportunity after the next lower high. You can't rule out the possibility this is just an over-exaggeration and capitulation, and that is usually the best time to buy a stock. So if we start to see ARKK bouncing off of these levels very impulsively, we could actually still see this inverse head and shoulders playing out. Remember, the confirmation is a break above 126 with a price target of 143, but we don't have confirmation until we break above 126 and stay above 107, so you still need to watch the price action. We're very close to knowing if this pattern is going to play out or invalidating by breaking down below support. On the VIX, we see fear increasing today, with the VIX going up over 7% and closing back above 18.2. There's still the possibility we're going to see the VIX spike up to 21 to close that gap, but as long as we see the VIX closing below 20, I think you need to buy the dip in this bull market. If you see the VIX closing above 20, then you need to be cautious of a deeper pullback that could turn into a stock market correction. And remember, we haven't yet had a true stock market correction this year, so if we're going to get one, it's going to happen in the month of December, which is just right around the corner. So look for that VIX level at 20 to be the indication if we're just going to get a shallow pullback or a deeper stock market correction. On Bitcoin, we're currently down about 4%, and we do look like we're testing that support level at 56,000 yet again, and we're still below the 50 EMA. So on Bitcoin, I suggest staying bullish at 56,000 or 53,000, but if we break below 52,000, I think you need to get a lot more cautious because Bitcoin could be coming down a lot lower. So right now, I still think this is a buy the dip opportunity as long as we're above 53,000. It does look like Bitcoin could be trying to put in a little bit of a double bottom right around 56,000, which would be bullish if we break back out above 60,000. So look for that breakout above 60,000 as a very early warning sign that Bitcoin's going back on the bull, or the breakdown below 52,000 to tell you that Bitcoin is going to continue to head lower. So those are your critical levels to pay attention to on Bitcoin, so watch them and continue to pay attention to the price action. I still think Bitcoin could break out to a new all-time high and hit that price target up there at 75,000. So don't rule out the possibility that this is a buy the dip opportunity off of support. On Amazon stock, we were down 2.83% today, and we did see Amazon getting to my price target at $37.60 before pulling back. So right now it looks like Amazon did hit my price target, which does mean we satisfied the bull run, which does mean we could start to see a pullback, and that's exactly what we're seeing with today's price action. We're still in the bull trend, so that doesn't mean it has to stop here, but you do want to be a lot more cautious after we hit these price targets. Right now, the support levels you want to watch on Amazon stock are going to be 35.52, 3,500, and 34.50. As long as we're above 3,500 and 34.50, you can buy the dip. If we start breaking below 34.50, you need to be a lot more cautious because it's very likely Amazon is going to roll over and we're going much lower. The support levels below the critical support will be at 3,400 and 33.11. On Tesla stock, we were up 1.74% today, and we continue to see Tesla closing above that 20 simple moving average and regaining the bull trend. We're very close to closing the gap above, so pay attention to that gap close because it could act as resistance. If Tesla closes the gap right around 1207 and starts to pull back, don't rule out the possibility that this is all just one giant bull flag, and we need to see where Tesla breaks out of this bull flag before we know where it's going next. If we close the gap above and we don't continue to break out above 1220, then you're looking for another pullback, which means we could be seeing Tesla coming all the way back down to about 1050. Then we could continue to consolidate and see if Tesla is going to break out to the upside and start running towards 1400, or break out to the downside and go close these gaps below at 911 and right around 847. If we close those gaps below, that means Tesla is rolling over. So the critical support level you want to pay attention to on Tesla stock is going to be right around 1100, 1050, 987, and the 50 EMA at 967. If we start breaking through those support levels, that does mean Tesla will be rolling over and we could see it going through a full-blown correction. But right now, I think the highest probability chance is a correction through time and to finish out this bull flag. So bound Tesla in between about 1030 and about 1208, and that should be where the bull flag stays within. If we break out of either of those levels in either direction, you know to get bullish above 1240 or get bearish down below about 987. On Apple stock, we were up 0.29% today, but we did have a very bullish day with Apple going up to a new all-time high and at one point trading just below 166. However, that resistance at 162 was just too strong and we did see selling for the rest of the day, and we still saw Apple closing below my price target at 162. So while we did hit multiple price targets, we did not close above any of them, so we still can't rule out the possibility that Apple met the price target at 162 and even exceeded it, starting going to that next price target at 166, and now it's time for Apple to go through a full-blown correction. That would obviously go hand in hand with a deeper pullback in the triple Qs, but right now we have bullish price action and a strong bull trend, so we can't just assume that Apple needs to go through a correction at this time. We're way above the upper Bollinger Band, so we're definitely due for a cool down period. So wait to see if Apple stock is going to find support at critical support before saying that it's rolling over. Our support levels to pay attention to will be 157, the breakout level right around 154, and our 20 simple moving average at 152. If we break below any of those support levels, get a lot more cautious, but as long as we're above the 20 simple moving average with the bull trend, there's still the possibility that Apple is going to go up for that next leg higher and try to either close at 166 or close above that level. If we close above 166, the next price targets are all the way in the 170s, and that would be a very bullish breakthrough, and it would help the triple Qs continue to climb higher. On the financial sector, we were up 1.41% today, and we did close back above the 50 EMA, but we still are losing the bull trend. But as long as we stay above this 50 EMA, we could still see the financial sector try to go up for another leg higher. The industrial sector was up 0.27% today, still staying above the 20 simple moving average and still holding on to the bull trend. The healthcare sector was down 0.45% today, and it does look like it's coming back down to that 50 EMA, and we are losing the bull trend in the short term. The energy sector was up 1.77% today and closed just above the 50 EMA, but overall this chart is starting to look a lot weaker, and it does look like the energy sector is trying to roll over. So jumping back over the S&P 500, we can definitely see some signs in the market that some of the sectors are looking like they want to roll over. We haven't got the confirmation of a rollover, but you definitely need to be more cautious at these levels, and you can definitely see it looks like we're going through a 5-wave advance, which could be coming to an end. We don't know it's over until we see the objective price action closing below critical support and or we lose the bull trend. So right now, just be cautious and don't get overly greedy at these levels, and we need to see a few more days of price action to know if we're going for that next leg higher or we're going to start pulling back and rolling over. Watch that critical support and stay objective, and you're much better off just being patient. This is going to be a short trading week with the holiday, and we're more than likely going to see an expedited volume in these next few days to help us understand where this market wants to go. If we hold on to the bull trend and we hold on to critical support, do expect to see that Santa Claus rally, which will take us out to a finish at all-time highs for the year end. Don't take anything for granted, and if we do start closing below critical support, don't be afraid to lock in some of those profits and get a lot more defensive. We don't want to get greedy and we don't want to be overly biased, so right now we need to be objective, and if we start closing below any critical support levels, we need to get a lot more cautious. We're not there yet, but it is possible we're going there in the future, so just stay objective and stay patient and continue to watch price action and don't take on too many risks at these levels. Also, don't forget that I am running a Black Friday special deal on Bank Trade Alerts where you can get 67% off your first month by applying the coupon code BLACKFRIDAY at checkout. Bank Trade Alerts only trades TQQs, and you get all of your buy and sell alerts directly via email and text message. So if you want to take advantage of the Black Friday deal on Bank Trade Alerts, you can find out all of the details and how to join and get the discount by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade, and I also bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.